It really is true that Cathie Wood is the kiss of death. And,
How's it going, everyone? This is Daniel, and in this video, we are going to be talking about Tesla, Jim Cramer, and Cathie Wood. So we have Jim Cramer that recently made a controversial comment about Cathie Wood. He stated that Cathie Wood is the kiss of death. So we're going to be talking about exactly why he said that, where he got his idea from to specifically state those words, and we're also going to go over and look at exactly what to expect for the world stock market, why 2020 has been really hard, not only for the stock market and also for the crypto market. So we're going to talk about it, all this important information in this video coming up. As you can see over here, we have the ARK Innovation ETF year-to-date performance. It's down 55.05%. And not only that, if you compare the performance of ARK with the overall stock market, SPY S&P 500 ETF is also down negative 15.9%. So even if you invested in a safe ETF, 2020 has been pretty rough. Even if you are investing in, let's say, Bitcoin, if you have cryptocurrency exposure, year to date, that specific part of the market, which is cryptocurrencies, Bitcoin down 37.66% year to date. So there's literally no way to escape the downside move of the overall stock market, the crypto markets, and the overall sentiment of the macroeconomic, the global economy, and etc. The only safest place that we found so far is the energy sector. So energy sector, if you invested at the beginning of the year, you could be up 41.17%. This is only due to what's been going on with Russia, Ukraine. Oil prices spiked up, and it definitely helped energy stocks to do very well in 2020 so far. But let's talk about exactly why Jim Cramer specifically stated that Cathie Wood is the kiss of death. And where did he get this idea from? Because a few videos back, we talked about a meme that Jim Cramer actually had on social media and Wall Street Bets, on Reddit, and etc. So as you can see, this was where people were posting and talking about. So last year, Cramer displayed his magnificent 7 stocks. 6 have been killed, 1 left, Tesla. As you can see over here, this meme was created after Netflix crashed, and they stated, okay, Tesla is the remaining one. Tesla could potentially be going down because, as you can see, Jim Cramer is represented as a death cross over here, knocking on the door of Tesla. So let's look at Tesla stock, right? I said we're going to talk about Tesla. As you can see, year to date, it's down 35.86%. Tesla has been very volatile. At one point, we actually recovered pretty well and got even close to being positive for the year. Unfortunately, we sold off again, and we're actually below the lows of 2022. And when you look at the meme, we have Jim Cramer that knocked down Tesla, and Tesla unfortunately went down, not only because Jim Cramer mentioned it, but of course other factors apply to it. We have the overall market that was going down. We have Elon Musk that was a little bit aggressive when it comes to selling his shares and also acquiring a new company, a social media company, which is Twitter. And still that deal is still on hold, of course, but there was a lot of things that happened after that, and people are still talking, okay, Cramer mentioned all these stocks, and these stocks just got crushed. But overall, the overall market has been pretty rough, not only for these big tech companies like Tesla. As I mentioned, the S&P 500 ETF, we're down 15%. And not only that, we have some stocks that are just getting crushed. And unfortunately, ARK Invest ETF holds some of these stocks that are just getting destroyed by the current market conditions. So another important thing that he mentions on the video that we're gonna watch, of course, Cramer stating that Cathie Wood is the kiss of death. He talks about Coinbase, right? So he goes over and talks about Coinbase, why that was pretty bad. And unfortunately, he mentioned Coinbase last year on April 14, 2021. He said, we like Coinbase to 475. So in a way, he basically got the idea of to say Cathie Wood is the kiss of death. I think from social media, as you can see, people were posting this all over the board, and now he's trying to transfer the kiss of death to Cathie Wood because her fund is just getting destroyed this year. Year-to-date performance is very horrible. But let's watch the video about, him saying that and a detailed breakdown of what he's going to be saying about Coinbase.
Jim,
the double downgrade was so gratuitous. I mean, now you double downgrade them. I think Ford's got a great lineup. I think GM's doing well. I think the Cathie Wood is the kiss of death. The Coinbase call was embarrassing. The act is there was nothing wrong. I think GM's doing pretty well, but people don't want to own that stock going into recession. So, I mean, look, there's a lot of setups that are real bad, but let's deal with the setups that are not as bad. There's a lot of food and drug that's good. I know people don't want that, but that's working. And there's a lot of companies that have come down a great bit. Now, soon, I mean, if General Motors offered a dividend, which Mary Barr didn't want to do, I think people would be reluctant to sell it here. But it really is true that Cathie Wood is the kiss of death. And, you usually don't want to say that, but I think you have to throw out all the bromides and really speak truthfully here because the viewers deserve it.
Jim,
she's awful.
I've been asking because I get maybe I'm just looking for some silver lining of some type, but do you ever remember a market bottom that's made before there's an overall capitulation across all indexes? I mean, is it possible that the individual leaders could have their own little, where everyone just basically pukes up everything that they have? I mean, you look at Netflix or even the big tech leaders, aren't they down enough to make a real bottom individually?
I think that they're, people just sell them because they're a source of funds. I mean, we've had bottoms that are caused by, say, Warren Buffett coming in and buying. We saw that with Bank of America. We've had bottoms where they wiped out 330 new companies that came public between 1990 and 2000. So, I mean, there has to be more destruction. We had a bottom in, we had a 2018 bottom, but that was with the S&P at 13 times earnings. We're at 16 to 17 times earnings. So we're still a little too high, but the panic's pretty thick. We have to find out how much systemic problems come from Tether. We don't know because the information has always been so sketchy. I mentioned Coinbase. I picked on them because they picked on Gary Gensler, which turned out to be not a great thing to do.
So as you saw from the video, he specifically mentions Coinbase. He talks about it, but Coinbase is just it got destroyed. It's sitting at around $67 right now, unfortunately. And the majority of this high-tech, high-growth stocks too, they have seen aggressive sell-off. Even Tesla has seen some sell-off. So the best thing to do right now is, of course, to really understand why this is happening. The most important thing you want to be looking at is that, okay, we have a lot of issues in 2022. We have the Fed that is trying to control inflation, and plus on top of that, we have a lot of instability in the global economy. We have war that's going on with Russia, Ukraine. We have the Chinese supply chain issues, COVID lockdowns, and there's been a lot of things that's been having a lot of pressure, not only on Tesla, not only on the overall market, the crypto market. So it's very rough. 2020 has been very, very hard so far. The only way that you actually could potentially be making money if you shorted the majority of the big tech companies like Netflix, Tesla, or Roku, and all those companies, or if you invested in the S&P 500 energy sector ETF. So as you can see, that's up 41.17%. And the most important thing is this is not going to last forever. The current conditions in the global economy, the current decline of these big tech companies, we're not going to last forever. If you look back and what happened to 2020 and when COVID hit, the stock market dropped significantly and it recovered. Of course, the Fed had a pretty big role to play on that situation. However, when you look at the conditions of what the world was at that state, we had a lot of lockdowns in Europe, in China, the United States, and it was pretty bad. But we've gone past that point 2 years now. It's been 2 years, 2020, 2020, 2022, and there are some slightly lockdowns happening in China that is affecting like Tesla and other companies, but at least we're in a better position when you look at the world in general. People are able to travel. There's not a lot of big restrictions. Of course, you have to be like vaccinated, show vaccines, and etc. But still, we are in a relatively better situation that we were 2 years ago, and things are not going to be like this forever. We're going to go past this, and eventually 2025 is going to come, 2030 is going to come. So things are not going to be the same like this everywhere. Of course, right now it seems very painful. It's very hurtful, especially if you start investing at the beginning of the year. It seems like everything is just going down aggressively to the downside, but really understand, if you're somebody that's a long-term investor, things will pass. Just keep your eye on the next few years. Just stay grounded, just stay focused on what you want to accomplish. Of course, let me know in the comments below, what do you think? Is Cathie Wood the kiss of death? Do you agree with what the Jim Cramer said? Is he trying to shift his attention from him to Cathie Wood, because her fund has just been going down aggressively to the downside? So let me know in the comments below. I'd love to hear your opinion. And of course, if you're new to the channel too, make sure to subscribe to the channel, turn on notification bell. And if you want free stocks too, check out the links in the description box below. But I'll catch you guys on another video. Have a wonderful day.